Alright, this is the weekly review for February, last week, February 2024. And these are the objectives that I want to learn and going forward that I want to utilize. So basically, we're starting off with the market profile. Like, what is the market profile here on a weekly chart? Now, it seems like it's consolidating, right? We have this consolidation here, but if you look at on a E-mini, right, we broke this. Last week, we broke this. On a weekly on a candle, so we broke and closed above this on a weekly candle. Same thing for YM, right? We broke above this high here from the previous week, and we broke above it, right? So this was a bullish week close. Now NQ didn't have that, so that kind of threw me off, and I'll talk about that and part of my mistakes. But going into this following week, we should be bullish, right? So that's the market profile. So it should be a bullish market. Now you can combine that with COT data and 20, 40, and 60 days to see where we can target. But that's at all-time high. That would be kind of challenging. So after the market profile, we have concluded that it's a bullish market. We are on a weekly profile, right? How can this bullish market play out on a day-to-day basis, right? That's where the news comes in. So looking at a daily chart and looking at news. So we had news all week, pretty much last week, right? Tuesday through Friday, we had news. When there's multiple news, you can expect a consolidation, right? And we saw that from the 2 weeks before as well, that there was a consolidation here followed by a midweek reversal. So we can expect the same thing this week going into it. So Monday, Tuesday, Wednesday can either form the low of the week, right? And like followed by an expansion up because it's a market profile is still bullish, or it can consolidate Monday, Tuesday, Wednesday, and then have a midweek reversal on Thursday and continue pushing higher on Friday, right? So this weekly profile was consolidation, midweek reversal on Thursday. What are your weekly targets, right? Since we are at all-time high, our targets are basically the previous week's highs and lows, and this is where you can get creative and have Fibonacci's to have 2 and 1.5 and 2 extension, right, to see where our possible targets can be. Now that we have the weekly profile, weekly targets, news blended in, and we have price targets as well. So now we look at the daily profile. So I think the daily profile would be utilized on the days that we're expecting a market push up, right? So that's how you use the daily profile. So for example, we did not reach the consequent encroachment, right? These order blocks here, this fair value gaps, these were our point of interest here, right? Where can it come down to? The CE of the fair value gap, or the order blocks here, the order blocks here. So those are our price target. Those are where we can expect to see some type of SMT, and we can expect to see some type of a daily profile being utilized in London session and or New York AM session, right? So if you look at this Thursday, our daily profile, we can blend that in with our daily profile. From Thursday, let's go down to 1 hour chart. So we have a drop right here, right? That was their London, creating the low of the week or low of the day at 3 a.m. right? Now on a 4 hour chart, that looks like this. Order block, nice order block that ran the liquidity that set right above that consequent encroachment of that fair value gap on daily, right? So we hit that in London. We have a London reversal profile, and what can we expect in New York? Going into New York, we can expect a continuation pattern. So that's exactly what happened. So London made the low of the day. We had an expansion profile in New York AM session, right? So now blend that in with the New York AM session news. So on Thursday we had 8:30 news coming out, right? So Thursday we had 8:30 news, right? So what can we expect on an 8:30 news? We can either expect news to run the lows, right? News to cause the manipulation, or we can expect manipulation to occur right before the news. If the manipulation occurs right before the news, like it did here, right, we can expect news at 8:30 to go push higher. Now, what can we also expect at this level? We can expect an SMT, right? There's no SMT with ES, but there is an SMT with a Dow. So we had SMT news was one directional, and we had market structure shift, 15 minutes, 1 hour, everything. We are in line with the weekly profile to push prices higher. So where was this trade here? I did trade this coming down here lower, right? I traded the this retracement back, right? After an expansion, we can consolidate or we can retrace back. So I took this trade here, retrace back, and then the proper trade would have been this buy here and then take it long. So here is my trade that I took, and I took this retracement down off a 1 minute chart, based on 1 minute chart, based on 1 minute charts market structure, right? So the better trade would have been obviously to buy from this order block, right? This was a high probability order block on 4 hours, and we can see it more clearly on 15 minute. We have this void here, and consequent encroachment of that void was obviously hit, and we got deeper retracement into it, and then finally we took off on Thursday. This was a late entry, 11:30 entry. So where could you have taken this entry from? 11:30 is very late in the game. So if you're not looking at the market, we have another entry here at 14:45, right? So right before that, right before the PM session. So I don't typically trade the PM session, but if this is what you're anticipating, right, a bullish move here, a void, a huge void, you can sometimes expect the PM session to give you that entry and then hold it until the next day, right, the next day model as well. So after a void, you have to be patient, and you could have gotten this entry from 11:30 and held it up until the PM session and then re-enter on Friday, or you could have held this bought option here and then held it until Friday AM close, or even a PM close on Friday, right? Market pushed really high on Friday PM session. So those were the I would say quote unquote perfect trade for that week. So those were the trade that you wanted to get into because the high time frame bias was on your side. Now, looking at the higher time frame, right? So our next would be define your higher time frame bias, right? Going into higher time frame bias was weekly. But why did you go short today? Or why did you go short throughout the week? I went short because my higher time frame definition was 4 hours, right? I saw this as a high probability order block coming down into this daily fair value gap as a high probability order block. And that the reason that is a high probability order block is because we are resisting that level up until Thursday. So that's why I took multiple shorts Monday, Tuesday, Wednesday, and even Thursday was the retracement short. But my Monday, Tuesday, Wednesday shorts were based off of this 4 hour order block, respecting price for that duration of that week, which was still a valid trade up until that point. Now, when we had the displacement, that I was anticipating this displacement in the beginning of the week, I anticipated this. When that displacement happened, I naturally was confused. I don't know why I was confused, because the market had such an energetic movement, and I kept thinking the market will consolidate. Instead of, the market gave me a reversal profile to take that long position up. So if you have this point of interest and market drops down fast and reacts from these areas very, very fast, don't be scared, right? Don't be scared, and stick with your higher time frame bias and wait patiently to have these higher time frame play, right? So these are very, very big trades here rather than bringing down the short. Now let's go back to our objective here. So for me, the higher time frame bias going short was the 4 hour. My lower time frame was 15-minute chart, and my entry was 1 minute chart. So those were the prices that I was looking for. The better ones, the better trade would have been higher time frame. Higher time frame was a daily or weekly, right? Bullish. Lower time frame would have been a 4 hour or 1 hour, which was both very clear, right? In this case, it was both very clear. This was the 4 hour order block, and on 1 hour chart, this would look like on a Thursday, this would have been that 1 hour order block, right? Now 15-minute, coming off of time frame alignment off of 4 hour, 15-minute would have been your nicer order block entry here, right? So if you put that here, this was a perfect entry in that consequent encroachment of that fair value gap. Now obviously, without even running the fit, this isn't a discount, deep discount here, okay? So those would have been the proper way of looking at higher time frame bias, which would have been weekly or daily. And I would say daily was clear because daily we dipped nicely into that fair value gap. So off of that daily to 1 hour or 4 hour to 15 minutes, both would have been a right choice in this case. And then your entry would have been off a 15-minute chart. Right, mistakes. Now let's talk about the biggest part of this week was my mistakes. My mistake was the fact that I did not compare the YM and ES, that they both had bullish market structure on weekly, right? Therefore, on a daily, they should have a bullish push up as well. My second mistake was the fact that when we had this high probability order block form, and this is a high probability order block because it reached that CE of the daily fair value gap, and it took out a low, right? So that's a high probability order block. We had an energetic movement away from it, and coming back, this drop into this order block on 4 hour or even a 15-minute, right? This drop back in right here. This is, I should have seen that as a smart money buy, right? So that's a buying right there. That's a buying opportunity right there for us to go long in. That's my mistake number 2. And overall, when I was going into this market in the beginning of the week, my bias was a midweek consolidation, right? And that's exactly what we did. And we expected an expansion, right? Midweek consolidation. Let's say you did not realize that Dow and ES was breaking highs, right? Let's say you didn't see that going into the week, which you didn't. But you expected some type of an expansion. Now, in this case, expansion was upward. If it was expansion downwards, you still would have had to identify an high probability order block or a high probability fair value gap for you to go long in. And this is exactly what happened. Even though you did not anticipate this expansion higher, you should have anticipated a smart money buying opportunity. So whenever there's a midweek consolidation, right, expect an expansion. Now, expansion could be your direction, or you read the market wrong. It could be in the opposite direction. But look for an opportunity where the smart money would be buying from.